Welcome to Buy, Hold, Sell. My name's Matthew Kipman, and today we've got a special thematic show for you. We're talking about commodities, those terrible things that have been going down, down, down for the best part of 3 years. And joining me, Don Williams from Platypus and Chris Stott from Wilson Asset Management. Chris, we'll start with you. Are commodities going to go down forever, or is there life in, we've got iron ore, coal, energy, all of them have just headed south. Is there life in there, and should we start looking at them?
There is life, Matthew. They won't go down forever. We're in obviously a quite deep part of the cycle now. The outlook for Chinese growth remains sluggish in the sense that it's going to continue to slow, and albeit at 5 or 6%, which is nothing to be scoffed at the moment. Look, we're underweight the sector. We don't own any base metal companies at the moment, but certainly we are seeing some small pockets of value emerging, particularly in the small resources sector. We're scourging the market at the moment for companies looking at presenting incredible value, stocks that are trading below their cash backing, for instance, where the cash burn's quite low. So there are some pockets of value starting to emerge, but we think that the weakness in China in terms of economic growth slowing will continue in the near term.
Don, do you agree with that? And is it just a case of there's too much supply now for very little demand, which is the reverse of a few years ago?
Yeah.
Under that scenario, it might take a long time to fix.
Yeah, look, the macro's poor, but I think you have to look at every commodity on its merits. So we have no iron ore exposure, and I don't think we'll have any in 5 years' time.
Too much supply?
Well, there is oversupply, but worse than that, the two major companies seem intent on increasing the supply. So we don't understand that in an environment where China, we think, is unlikely to demand the same number of tonnes next year as this year. We think it's a ridiculous situation. But there are other things to do in the sector. We're quite negative on energy as well. And but in the base metals, we have some exposure. We have a couple of gold companies. We think in a more volatile environment, which is what we see ahead, having a couple of gold names makes a bit of sense. And we have two base metal companies as well.
And those base metal companies, just extreme value that you can't ignore, or because it doesn't sound like the thematic's
well, they're commodities that are in relatively short supply. So one's copper, and one is nickel, and we think that's a reasonable place to be if you have a decent project.
Okay, Chris, so let's go with energy, which we always said, remember there was peak oil, and then oil proper price is $100 a barrel, and then we went through a scenario where it went to 40, bounced a bit. It just seems like that all those conspiracy theories, the fact is there's not enough demand for the energy out there. Is that how you see it?
Look, we think that the oil price has certainly been bruised and battered in the last 12 months in particular, and companies like Qantas Airlines have benefited quite strongly from that. When you take a step back and look at the global macroeconomic picture, things are okay. Surely growth is sluggish in Australia, but the American economy is close to booming, with interest rates moving higher over the next decade. And Europe continues to experience below trend growth, which presents generally a good environment over the medium to longer term for oil to bounce. And we certainly are not calling, given the current volatility, we prefer to wait and see the volatility come out of the market, the oil market in particular, or for energy stocks. But certainly it's one that we're looking at quite closely at from a medium to longer term perspective.
Don, and you've seen massive falls in Santos. You've seen Origin, which is energy related, have to do a capital raise. Yep. Even Woodside, which is a bit more of a pillar of strength, and making corporate moves in the area, all come off 40, 50, 70% even. Yep. Do we start looking at those big names, or it's just too early?
Look, I mean, we look at things, periodically. I mean, all the time. But I still think it's too early. It seems to us that the energy market in general is getting a bit more complex, and you've got new technologies, battery technology for cars, for example. So you can make a case that the longer term picture for oil is a lot worse than it was 10 years ago.
And what about those conspiracy theories that the OPEC had fallen apart, and the Americans were they were trying to knock the American new shale producers out of the market? Do you think it is that, or is it just the fact that there was a lot of supply around and the demand was easing?
Yeah, look, I think it was more the latter. There's a lot of supply. I can understand why Saudi doesn't want to cut their production, but the shale guys, a lot of the shale guys are still going, and it's proving to be more difficult than most people thought to get that production down in the United States.
Chris, one we haven't talked about at length is coal, another bulk commodity which suffered badly. Is there any light for coal in terms of pickup in demand? And is there any stories you might be able to, tell us about?
Sure, I think we are getting to the bottom of the cycle in coal over the next 1 to 2 years, and we've started to see a small number of M&A transactions come into that particular part of the market, which is quite typically signals that we are getting close to the bottom of a cycle if you look at history. Notably, for example, New Hope's recent transaction.
And we've got Glencore talking about having to sell assets.
We do. So typically this sort of activity, if you look back in history, suggests that we are getting close to a bottom, and it'd be foolish to try and call a bottom and as a precise date or what have you, but certainly we think that we will approach or get to a bottom in the next year or two, and that certainly presents some value for companies like New Hope that are out there with still net cash balance on the balance sheet post this recent deal they've announced. So a sector to watch in the next few years.
So there you have it. There's not a lot going on at the moment. There's no light shining in our face, but over the next year or so, you want to stay close to all the resource names.